You're welcome to Section 3 of Human Resource Management in the national and international setting. My name is Ssebuyungo Wilber, Kivekayunga, Nkumba University, and the Managing Director of the Action Entrepreneurs. We're focusing on human resource management, and this is Session 3. In our Session 3, we are going to focus on mainly looking at the concepts which we have seen here before, and the concept of human resource policies and their formulation, and what could be the contents of a human resource policy. Then we shall also be adding on the performance appraisals and job profiling, and human resource development, which we call training. So in this session, let us start with what we call performance targeting. Performance is monitored and assessed, then evaluated against defined objectives and key performance indicators. So where we do not have the objectives and we have also not set key performance indicators, then trying to measure performance becomes difficult, because performance is measured, monitored, and evaluated basing on the objectives and the key performance indicators. Those are the ones that we base on to see whether performance is low, moderate, or high performance. So to what extent is the performance high or low is measured against the objectives that are set. That's why the objectives that we set follow a SMART grade. A SMART grade is the objectives have to be specific, measurable, they should be attainable or achievable, and then realistic and time bound. For them, when they have these characteristics, it becomes easier to actually measure performance. So that is why it is important for, if it is a media house or an education institution or business institution, an organization, NGO, or any other government organization, it is important to first have to define the objectives and also to specify the key performance indicators. Then specific activities which are scheduled, they are defined and are scheduled with a specific time frame. Then the reporting system is also established, and the software for tracking progress can be installed. And if the organization is also international, then the software can be interlinked to capture information in various states where the subsidiaries or the entire the organization has spread its branches and operational wings. Then set performance review meetings with stakeholders, then give accountability, and then also set up external assessors to conduct incidental or scheduled monitoring activities and the evaluation activities. So these the steps that you need to take while intending to actually undertake performance targets, and you want to set performance targets. You need these steps or these aspects to be addressed before you actually define the targets. So when you set them up, then now you can set the performance targets, because you have created a ground upon which these targets can be met and can also be evaluated and monitored. So here we are going to actually look at the insight on a policy development and the frameworking, what we call the setting a framework for policy. And the examples, we are taking a policy regarding finance, policy regarding human resource, and also a policy regarding procurement. So in a finance policy, taking an example of a radio station or of a school or any other, then the policy, this policy framework works all around in all organizations, and especially those which are profit making, but even can work for organizations which are non-profit making. So the finance policy should have to define the finance planning policy. Within there, an element about finance planning. When what is the span for a plan to be reviewed? When should the plan when should the plan expire, and when should the plan be redrafted, or and the processes, and who should be making the planning board, or who should be on the table, which stakeholders should be involved. Then the finance budgeting policy, then the budgeting that defines how budgeting has got to be undertaken, and who should be involved, and how to set the limits, the budgeting boundaries. Then the income management policy, how are the incomes of the organization going to be managed? Then the management of source document, policy of managing source documents. Where should the source documents be kept? Who is in charge of that? And then who should have a source, a receipt? Who should have a voucher? What should we do in cases where even employees are carrying their own receipts which are not known by the organization? So the policy regarding source documents and the coding of those source documents has got to be clearly stated, whether systemic or physical. Software and finance data protection should be defined. Administration of expenses, the requisitioning, that one can be shaped, the wording. Requisitioning policy can be defined, and cash transfer policy, the administration of prices policy, who can change prices. Okay, what are the price levels? Banking policy, can we use cash at hand when the customer pays at hand or pays at bank? Or can we consume at hand, or we first bank and then we go through the process? All that is defined. Data entry policy, when do we enter data? Do we wait for the month, the data to accumulate before entering it in the software? The order and safety of finance records, statutory data and remittances, those are now NSSF for Uganda, National Social Security Fund, the payment of taxes and local service taxes, all those statutory requirements, licenses, and the permits, operational permits. So when and how are they handled? Supplier records policy, customer records policy, payment policy, and finance reporting policy, internal and external audit policies. So, and other finance policy should be in this framework. Then we also have the HR policy. HR policy can have, for example, the recruitment policy, the appointment policy, attendance to duty and working hour policy, remuneration policy, the human resource development policy, performance management policy, the leave policy. We want to see health, safety, and welfare of staff policy, conduct and discipline of staff policy, the discipline code policy, grievance management policy. This is where how do we handle grievances, and then promotional policies. What do we base on to promote, and when do we promote? Then internal transfer of staff policy, and then we also have the management of staff records policy. The separation form, this is separation from employment and benefits policy. Someone is to be separated from employment or termination, or by terms of expiration of contract, or terms of age, due to aging. What are the benefits of such separation from employment? Then employee relations policy. We can have employee relations policy, the death, loss, or relative policy. If the person dies or loses a relatives, loses a relative or relatives, or has relationships with their relatives, do they have to come at workplace during work hours and visit the staff at workplace? And should they be given opportunities to work? Should they sit in the offices, in chairs of the staff? Or now, how do they handle relatives at workplaces? Another example is the procurement policy, where you see we have the assessment and the selection of suppliers, contract and agreements of suppliers, how should they be handled, award of contracts and the processes, orders and the handling local purchase orders, management of goods in transit policy, management of goods on delivery policy. When the goods are delivered, what do we do? How do we handle to prevent loss or prevent even falsification of documentation, or those reconciliations needed? Store and inventory management. How do we manage the store and the inventory? That's a policy. Management of assessment. These are assessments. Disposal of assets policy. If we are to dispose assets, or you want to sell assets, what are the processes, what are the procedures, and what are the regulations? Valuation policy of assets, asset protection policy, and determination of contracts, rejection of counterfeit products, handling supplier grievances. Yeah, that word grievance, we should shape it up. But this is a framework. So this framework is not fixed. It also depends on the organization establishment. And setting these frameworks requires intensive research, also observation of the laws and regulations set in the country, and also the organizational policies to guide all operations and control of systems. The policies that are considered while making decisions need to be collaborative, and there's a need for participative and participatory involvement of stakeholders to make sure that the policies are made with thorough considerations of various environments and situations. So when these policies are set, they form the culture and the working system of the organization, where procedures and processes can be established. So for now, we are looking at what we call the standard operating procedures and processes. So standard operating procedures are also called SOPs, are a step-by-step process, one following the other in a sequence that a worker or a team should undertake to realize intended outcomes. So it is a step-by-step process, one process following another in that sequence that a worker or a team of workers have to undertake to realize intended outcomes. So the relevance of these standard operating procedures is causing orderliness to avert possibilities of collision in work and to eliminate confusion in systems. Work should be flowing, tasks should be flowing smoothly, without collision, without confusion, but with orderliness. So it becomes easier to check mismatches in actions and operations when procedures are defined and are organized in such a way that results into quick work. Work should be fast, steady fast, quick, and quality work, timely work, less costs, and eliminates fraud or any form of misconduct, and brings out customer, partners, and these are supplier satisfactions. So what were we all about? We want things to go faster, to have less cost, but high quality and high quantities in numbers, and to eliminate possibilities of fraud and misconducts in the workplace, so that by the end of the day, the ultimate desire is to see that customers and all other partners get satisfied in the services that we are rendering in this organization. In this section, we are going to look at what we call human resource development. We want to develop human resource. So human resource development is an endeavor that an organization undertakes to increase the knowledge, the skills, and the competencies of staff. It's a staff, whether they are in management, in operations, or in strategic positions. There must be increase in knowledge and increase in skills, so that we improve the ability of these workers, whether employers or employees, so that there is efficiency and effectiveness. So even employers and directors need staff development activities. They need training. It is commonly known that and perceived that employers don't need training, but it is very central. The development of an organization depends on the level of skills and knowledge that its workers possess. The organization is as good as its workers. So the progress of an organization widely depends on the progress and the improvement in effectiveness and efficiency of its workers. So when workers cannot, then the organization can also not do or accomplish certain or achieve some goals. The organization conducts job analysis, performance appraisals, and skill gap analysis to actually be able to guide, direct, and facilitate its employees through training and through advisory services and other mentorship services. So these job analysis, performance appraisals, and skill gap analysis are done to assess the training needs of the organization or a specified department within the organization, or a specified trainee who is a staff or a member of the organization to upscale in skills, knowledge, and abilities to perform a particular task or a set of tasks. Thus, assessing and evaluating of training needs can be central or decentralized. So we can do it in each department, or we can do it in entirely in the whole organization. When it is central, then assessment of needs is central when it is conducted at headquarters of the whole organization, or it is decentral if it is done in specific departments or branches of the organization without basing at the headquarters. So results of job and skill gaps analysis. When we are analyzing a job, analyzing people's work to identify gaps in skills and even their working, we identify these gaps, they inform us of what we need to do when we are training them. So conducting job and skill gap analysis yields the specific employees that need training, helps us to know what skill gaps exist in the organization, then ways to design effective training programs will also guide us to set a ground for assessing training programs to see whether they have been effective or ineffective. We also base on the skill and the skill gaps analysis to be able to identify resources needed for a job, set materials required during training, and then the qualitative and quantitative information about workers' experience, customer experience, and other stakeholders' experiences when doing the job, gives us a ground for retrenching or downsizing and even upsizing. Though many organizations look at downsizing, but there can be a possibility where we need to increase the number of employees in the workplace, which we call upsizing. We also have the other alternative, which we call to enable us to check the necessary changes within the workplace. So we are able to tell which changes needs to be undertaken in the workplaces, or those changes that have taken place in the workplace when we do skill gaps analysis, that we are able to see that because of these changes that have taken place, employees have not yet adopted, or they are still having some gaps that needs to be addressed so that they do well or they work better. So these changes could be technological, financial, or diversity changes on a need for work readiness, and maybe the relations are still lacking. We can also define the roles and responsibilities of each of the employees, and be able to guide them appropriately, or shape the responsibilities and roles, aligning them so that we eliminate possibilities where there are gaps in responsibilities and the roles of workers. In this section, again, we are going to look at performance appraisal systems. Then we need to ask ourselves a question: what is performance appraisal? Performance appraisal is an organizational strategy of assessing the status of staff and their practices. So this practice of performance appraisal can be periodic, and usually it is communicated to staff to prepare for an appraisal exercise. So depending on how the appraisal is done, can be peer appraisal system or other ways of appraising, as we shall see. So why do we appraise? Appraisal will help us to determine the success of a department or a staff and their weaknesses. It will also enable us to establish the current performance and compare with the past to forecast the future performance of the organization, which is essential in enabling us to make decisions about human resource practices and the environment within which human resource is working. So it also provides a comprehensive understanding of the current practices within the workplace. What are they actually doing? And to what extent are they achieving outcomes and those intended outcomes? It guides in setting organizational goals, so we can restate organizational goals basing on results of a performance appraisal. We can also determine the level of efficiency and effectiveness of a department or a worker. Then we can also clearly spell the cause-effect relationship between practices and performance, methodology and outcomes, and competencies and outcomes. We can keep comparing them, methods of work and the outcomes, the competence of workers and outcomes, the practices and outcomes. So equipment available and outcome. We can look at management, effectiveness and outcomes. We can now start to see, because we have done a performance appraisal exercise. So the current challenges are mined these employees in a performance activity, a performance appraisal activity. These employees can report issues of difficulty, the challenges they are undergoing, and they can also propose solutions, including the legalities involved in solving those challenges. So here we're going to see some of the performance appraisal techniques. A technique is also called a method of appraising. So these approaches or methods or techniques are actually the ways you can appraise your employees. There's what we call the 360-degree feedback. So performance appraisals in the 360-degree feedback evaluate an employee based on feedback gathered from his manager or customers and peers. So you go outside and look manager, customer, peers, those collegial, in the collegial environment, those colleagues, what are they saying about that worker? So you can also see there is another which is doubling the 360. It is going it is going around the circle and going again the second round, the 720-degree method. So this demands assessment of stakeholders. Almost most of the stakeholders get involved here. It also forms groups outside the company. So those even outside the company are involved in appraising a worker. Such as investors, clients, suppliers, and sometimes you can involve people who are outside there. You're going to do some findings of the psychological appraisal and also management of objectives as an appraisal technique. So here I'm giving you some of the briefs. So psychological appraisals identify the hidden potential of employees and also focuses on analyzing their individual the future performance of an employee, such as the intellectual traits, could be interpersonal skills, the personality traits, those who are introverts, outroverts, agreeable, those traits, and those who are tolerant, those who are intolerant. Those traits are also assessed in the psychological appraisal. The cognitive abilities, leadership skills, and emotional quotient of the worker is looked at. So psychological appraisals mainly look at what we cannot see and what most people cannot see. Some people have inherent potentials which if we actually studied and forecasted, we can actually achieve much more, and these people can actually be more enabled if the manager and the appraising body has the perspective of future improvement in this worker. So if we conduct psychological appraisals, that is what is involved. Then we also have the other called assessment center method. Employees know how others see them, and then so how do others see you? Okay, that is what is its effect to your work performance? How do others see you? If you dress like that, how do others see you? And how does that affect your work? If your office is that disorganized and scattered, how do others see you? And then and what is the effect of that in the perspectives and the attitudes of others towards you? That is what is involved in the in what we call assessment center method. But we also had another method here which we hadn't mentioned about. So the management of objective method. Here the staff and managers work together to identify, organize the objectives of their work, or department, and what actually to focus on is drawn together between the worker and between the staff and the manager or the supervisor. So the management assesses the clear goals and checks the progress periodically, debate over the feasibility of achieving these goals because they have been drawn together with the with the with the staff, and therefore the staff has to work towards achieving them because they were drawn within the achievement limits of such a staff and the potential of the staff, which we always consider what we call incremental potential. Potential of a person should not remain stunted or stable or constant, but should be incrementally achieving. So your expectations of last year should be they should be less than the expectation of this year, and those of the future should be greater than what we have today. So we sit together in management of objective method, the manager and the employee or this worker sit together and agree on the performance targets, and then afterwards when it comes to assessment or appraisal, they now measure according to what was agreed or upon. There are also behaviorally anchored rating scales, which we are called bars. This method involves multiple statements that describe the employee's common behavior. So those statements are tossed around, and these statements help to measure the performance of an individual against predetermined standards. Those standards are set, and therefore the individual person has got to be able to hit those standards through common employee behavior. Your behavior each day, the way you act, the patterns you follow, and the trends you're following should be within the predetermined standards. And this one measures this behavior against the standards, and either overscores, underscores, or moderately scores your behavior. So human resource accounting method is also considered, which involves analyzing employees' performance through monetary benefits. Is the employee yielding more partnerships that are resulting into more revenue? Is the quality of worker increasingly getting better because we have this employee? Is the quantity increasing because we have this worker? Is the cost reducing? Are the costs reducing because the worker is with us? Those are what we are actually considering in human resource accounting method. It considers costs reducing and benefits increasing in terms of quantity, quality, and partnerships increasing, relationships increasing, the brand equity or brand identity of the organization should be increasing because the employee is with us. Then there is also peer appraisal, where two or more appraisers conduct an appraisal of a worker. There's also self-appraisal, where the worker or the appraisee is also the appraiser. There are others which are integrative, which involve various appraisal techniques so you employ various appraisal techniques to draw conclusion about the results of appraisal, about the performance of an appraisal, comparing performance with the standards. So those are integrative. We call them integrative because they bring together the various appraisal techniques and can be embedded in a single appraisal tool, so, or appraisal instrument. So here we are ending here for this session. We shall return with session 4, which will focus on contracts and agreements and also other aspects, as we shall share in session 4 of this presentation of human resource management and international human resource management. Thank you. This is Wilber, Ssebuyungo, Kivekayunga. If you want to contact us, you can make a call with 0704 05 4977. The country code is +256. The contact is 704 05 4977. All action entrepreneurs at gmail.com or kivekayunga@gmail.com or actionkayunga@gmail.com. You can also use Ssebuyungo@nkumbauniversity.ac.ug. Thank you.